Hello guys, and welcome back to a brand new video by Vertex Investing. Tans here, and today I'm going to go through a trade breakdown by one of our students. Okay, so the reason why I can't do a breakdown of all of our students' trades is because we have a rule-based entry system, which I keep going on about, I know, in these videos, and I can't really break that down because that's what gets taught in the course. However, the free strategy is what we call a risk entry. And what I mean by that is, for example, when you get breaks of structures, OB, break structure, OB, there's always going to be OBs below, right? And the problem with the risk entry is you don't always know which OB is the right one. And our confirmation entry would help you decide that, okay? And that's the main difference. And that's why our strike rate is so much better than the free strategy. Not saying the free strategy isn't good, because the risk to reward, and as you've seen, some people have taken the free strategy and like past FTMO trials hit milestone risk to rewards. You know, it's crazy. It still works, and you're still going to be in the green. But this is another level of a refinement that we teach at Vertex. And before I go on, we do actually have a discount at the moment, so be sure to visit our website. We only have 30% discount code remaining, because it all went this morning. So that's why I said be sure to follow us on Instagram and Telegram so you don't miss out on any of these offers. So the discount code is NY30, and you can get 30% off our trade membership, and that does not include the monthly fee. Alternatively, if you want to join the bootcamp still has the £500 code, so you can use NY500 to get £500 off the bootcamp. And if you want to find out more, feel free to email us, message us on Telegram or Instagram, or visit our website to find out a bit more information about what you can get and what we can do for you at Vertex. But I won't waste any more of your time. Let's get straight to this. So this was a trade that he took. I just went off it. There we go. So this is a Euro USD long, and he closed it for 20R. And this is, I think, one of his first live account trades that he took. Okay, and I'm going to do a breakdown of this. So this is a risk entry that he took on this, and it's very clean, as you can see. It's a very clean entry. So let's get back to the chart. So let's go back to where he was. So he was. Let's just go here. Okay, so the first thing we need to realize is where our bias is. Now, he just used the hourly time frame, but if we can see what's happening on the daily to the 4 hour, we can see that it's very bullish, right? And we're just breaking structure and going on. Okay, and if we go from here, we can see that the structure break is from this candle here. Let me mark that out for you guys. Okay, that's a structure break. And the OB that's here is this candle here. Okay, so that's our candle. That's our OB. Now, bear in mind, remember to include the wick of the next candle, because when you refine it, you have to remember that this wick is also included, and it has to be the one on the right. Okay, if that wick surpasses the previous one, you want to include that. Now, there is a reason for this, which I'm not going to explain on this video, because it is fairly unique to us, and it's something that I found on backtesting, why we include it in. But again, obviously do your own research to find out why that potentially is. But anyway, you just have to remember to just include the wick. Now, what you can do, you can place an order just from this open. I think you'll get a 7 to about 8 pip stop, so that's not too bad. And again, if you use the 50%, you'll get a 4 pip stop, which is solid for this trade. And our TP is going to be here. Now, bear in mind, when you're using this strategy, I know we can get some ridiculous risk to rewards. Don't always aim so big, because you have to bear in mind what time frame you're trading on. For example, if you're using the hourly, you can't expect to have a huge swing, especially in the position you're in on the daily, because on the daily we've literally just broken structure, so we will have some sort of pullback, right, as we all know. So you can't expect to have a huge swing from this point of interest, because on the daily we should get some sort of a pullback, right? So that's just how it works. And obviously we get a pullback, and there's an OB sitting here. Okay, so we may get a pullback to this area before we carry on. Now, if you go back to the hourly, what you can do is you can close most of your position, like 90% of your position here, and leave 0.1 leave 10% of your position remaining and hold that as a swing. Is up to you how you want to play that. Okay, but we're not going to place the order here because I think that stop loss is far too big. But he used a 10-minute OB, and that's what I mean, the beauty of going through the time frames to find the OB. Now, one thing we teach our students is not to be greedy. So if you find a risk to reward that you're happy with, use that. You don't have, it's not about going to the lowest time frame possible. It's about finding the safest trade for you and what you're comfortable taking. Now we have the standard of a 2-pip stop. We don't really want to do anything lower, and if you want to do lower, it'll have to depend on your spread of your broker, because with Eurusd, and the reason why we stick to majors is because the spread is so tight regardless of what broker you're using. And I know from my broker it's quite tight. It's normally less than a pip. Well, it was always less than a pip, to be fair, unless it's a spread hours, but the spread is really good on these pairs. But anyway, if we look, we've just placed the order at the open, and if I put it exactly at the open, there we go, and the stop loss was 2 pips. Now obviously when you go to place this on your MT4, if it's not the same as TradingView, just reanalyze it. It won't be far off to the OB on your MT4, because you don't want to miss trades for little mistakes like that. So that's one of the key things to just remember. But yeah, so we got our order set, 2 pip stop loss, 20 RTP, and let's see what happens. So, well, we know what happens, and it triggered perfectly and hit TP. Now in this case, when you're placing buys, just remember you have to include spread, because when you're putting a buy in, sometimes you may miss these trades from spread. But again, on these pairs you should be okay. But if you're using different pairs like the exotics or minor pairs, the spread is a little bit higher, so these buys may not trigger. And again, if you're going for a sell, you may need to extend your SL just a little bit. SL being stop loss, you may need to extend it just a little bit just to account for that spread difference. But this was a great 20R trade that he took, and that was a breakdown for it. There isn't really much more to it. He hit 20R in the space of what, 6 hours, so that's 20% done. He did take 2 losses, however, on GBP USD, so he ended the day at 18% on. But I think that was a great trade from him, and that's an example of one of our students and what they're doing. Again, this isn't our refined method, however it still works, and some of our students still use this strategy. But yeah, the difference being is that our confirmation entry will just confirm that this is the right OB, because there's always points of interest sitting below. Okay, but again, he went about it perfectly, and he understood the risk that he's taken, and he took it nicely, and that's a perfect way to trade. But for now, I will leave you guys be. I've got plenty of content and breakdowns to do, because you guys are sending me so many messages with trades that you've taken. And actually I'll post some of them here. You can actually see them. Some of you are passing FTMOs, some of you are hitting milestones, and I just think it's brilliant. And the fact that you're taking it from the few videos that I've done is just amazing. Again, if you haven't downloaded the PDF, make sure you do. But for now, take care, trade safe, and I'll see you in the next video.